And welcome back. In today's video, I want to talk about Fannie Mae's latest real estate market predictions through 2025. They also provide their update or their predictions through 2024 as well regarding home prices, home sales, and mortgage rates. So I have a lot to share in today's video. Thank you so much for joining me, and let's begin. Just posted 1 week ago here. It says housing activity is expected to pick up in 2024 as rates move lower. They also say here that while housing affordability is still seriously constrained following the great run-up in prices over the past several years, the supply of existing houses available for sale or housing inventory is finally showing signs of loosening. Now, I'm going to challenge them on that because here is inventory levels according to altosresearch.com over the past several years, going back to the beginning of March of 2019. So it says here the supply of existing houses is finally showing signs of loosening. In other words, getting better for home buyers. And I would again challenge them because right now there's around 500,000 houses for sale nationwide. This is higher compared to 12 months ago at 430,000. So approximately 70,000 more homes for sale right now compared to 1 year ago, which is a positive sign. If you guys are looking to buy a house, we want to see more inventory to have more options. And of course, if inventory increases by a significant amount, that will decrease prices or should decrease prices as well. So I will challenge them though, is that what's happening right now is not as good as it was last year. So last year, this time, there's approximately 245,000 more homes for sale compared to the previous year. Now we're only up by about 70,000. What is good news though, is that we're not seeing the decreases of inventory in 2021 and 2020, for example, because back right here, the very end of February 2022, there was less houses for sale compared to the previous year. On top of that, 21 compared to 20, big difference. 320,000 to be exact, or to be approximate, in 2021. And the year before that, 719,000. So a huge decrease of inventory from 20 through 21. Whereas right now, a very small increase, loosening, but very, very small increases so far this year. I just want to provide some context regarding that. They also say here, we continue to expect a modest recovery in home sales over the course of 2024 and for rates to drift downward. With recent home sales and mortgage application measures coming in near their expectations, I have a lot to share regarding that. We have made only modest adjustments to our housing market outlook. They post a housing market update or a housing market forecast each and every month. It says here, we expect total home sales in 2024 to rise 5% to 5 million units, a slight upgrade from the 4.96 million in their previous forecast here. So in regards here, saying that their home sales and application numbers came in line with expectations here, and that's one of the reasons why they made these adjustments here. I want to provide some context regarding this as well, which is this right here. According to the National Association of Realtors, for the month of January, they posted this last week. The seasonally adjusted annualized number of home sales, in other words, the current sales pace of home sales on a national level, at least for January, was at 4 million. So the sales pace this January, multiply that by 12, do a seasonal adjustment, you would get to 4 million home sales. This is actually roughly in line with a year ago at around 4.07 million. Also a slight increase compared to December as well, going from about 3.9 to about 4 million. So even though home sales increased from December, this is seasonally adjusted, it's still roughly on par with 12 months ago. On top of that, they're talking about how application numbers were in line with their forecast here. The numbers of people submitting applications to buy houses using loans is still at very, very low levels here. And here's a chart showing just that. This is actually on the Mortgage News Daily's website here, looking at their purchase index. Obviously, the higher the number means that more people are submitting loan applications to buy houses. And of course, a low number means there's a lack thereof. So over the past 5 years, let's just go back 1 year. 1 year, it's relatively flat. However, over the past 5 years, you can see ever since really 2021, this number has been decreasing, which implies that there's fewer people submitting loan applications. On top of that, over the past 10 years, you can see this here, huge decrease of application numbers. And the levels we have right now at around 150, that index is really roughly on par with approximately the summer months of 1995. So in other words, a huge decrease in demand due to people not submitting loan applications, at least at very, very low levels here. Fannie Mae also mentioned their home purchase sentiment index, which is a measure of people's confidence in our US housing market. A high number means a lot of confidence. And of course, a low number means a lack of confidence in our US housing market here. It actually increased by 3.5 points this January, the strongest level since March of 2022. Driving much of this change was the anticipation that mortgage rates will decrease, as the survey reported the highest net share of consumers expecting rates to decrease since its inception in 2011. So this survey is a monthly survey from Fannie Mae that goes back to 2011. They're saying here that the amount of people who responded to the survey here had the highest share of people who said or expect to see that rates will decrease. So I imagine that if we have this sentiment overall in which people believe that rates will decrease, maybe that would entice people to buy houses now in fear that prices may increase further, who knows. But there may be this sentiment overall in which people believe that because rates are going to decrease, why not buy a house now and just refinance later? That is a risky move, especially if you're stretching yourself to buy a house. My advice to you guys is that, don't bank on the fact that you'll be able to refinance at a later date. This is basically applying for a new loan. So you have to go back and do a loan application, show you have the same income or you still have a job. And also on top of that, your credit hasn't changed, et cetera, et cetera. On top of that, you have to have equity in your house in order to refinance as well. So I just worry about people who may be buying right now, banking on the fact that they're going to have to refinance in the near term. But what happens if rates don't decrease enough, or if prices decrease so much that those people don't have any equity in their houses? I fear the people who will be most at risk for this are people buying houses with a minimum down payment. Maybe they're doing a conventional loan at 3% down, which is the minimum down payment, or they're doing an FHA loan at 3.5% down. So a very small down payment, therefore a higher risk of being underwater on their mortgage loan in the future if home prices were to decrease. So in any case, let's get back to Fannie Mae's housing market predictions. And here's a summary looking at their predictions through 2025 for housing starts, home sales, home prices, and rates. So let's first talk about housing starts. What I focus on is single family. These numbers, by the way, are in thousands of units, and they're also seasonally adjusted and annualized as well. So for 2023, last year, single family housing starts decreased by 6% compared to 2022. However, they are expecting a rebound this year, increasing by 7.4% from 23, and then increasing further in 2025. Now, this is night and day difference compared to multifamily. Look at this, multifamily housing starts. These are buildings at least 2 units or more, down 14% from 2022. And also their forecast down 13% this year and down 11% in 2025. This is likely due to the fact we have nearly all-time record highs for multifamily residential apartment buildings that are under construction right now. So therefore, it makes sense that we're going to see a decrease of housing starts as well. I actually agree with them regarding that. Regarding home sales, new single-family home sales increased by 4.2% last year. Look at this though, giant increase of nearly 10% is our forecast this year, and then the following year increasing by 4.2%. In regards to existing single-family houses as well as condos and co-ops, it fell 18.7% in 2023 from 22, compared to the 4.2% increase for new home sales. One thing I do want to mention, though, is that a lot of people know this, but even though we have a 4% increase of new home construction, these are houses that were brand new that closed or the sale was finalized last year. One of the reasons why sales of new home construction increase and also existing houses decrease is because all these incentives that home builders are offering home buyers. So therefore, if you're looking to buy a brand new house, if you guys go to a new home development, you can ask them this: what kind of sales incentives do you have? What kind of financing incentives do you have? I have done a lot of home tours in the Sacramento area over the past couple of months here. Most builders in my area are offering free closing costs. So for example, 1% of the purchase price, they'll give you to decrease your out-of-pocket expenses in buying a house. Let me give you guys an example. Let's say you're buying a house, it's $500,000. They're going to give you a 1% closing cost credit. 1% of $500,000 is $5,000. Therefore, your out-of-pocket expenses or your closing costs just decreased by $5,000. So I'm seeing that a lot in my neck of the woods. So that's one reason why home builders have been driving sales, is offering these incentives to home buyers. Hope that makes sense. So I'm going to actually take a deep dive into existing home sales though, because this right here at 4.09 million, that was the actual number of home sales last year. That was a 28-year low, the lowest level since 1995. However, look at 2024 though. This year, they're calling for a 4.2% gain and then a giant increase of 12% in 2025. So here's what I did for you guys. I want to provide some context regarding how low these numbers really are. How's this compared to previous years? So here's an Excel document I made for you guys. And I showed how each of the years, how many sales of existing houses we had according to the National Association of Realtors. So for example, like I mentioned, 2023, 4.09 million, exactly what they have right here. So that was a decrease of 19% compared to the previous year. And also, just for fun, compared to pre-COVID levels in 2018 and 2019, that was down a whopping 23%. Now, here's something that I found to be absolutely remarkable. I actually looked at what's the median amount of closed home sales since 1989. The median number, or the middle number, half of the years had more houses for sale or more houses that sold, and half of the years had less houses that closed. The median number since 1989, based on my nerdy Excel formula there, is about 5 million. So it's normal to have 5 million existing home sales nationwide. Therefore, 2023 at about 4 million, we missed about 1 million houses that did not close last year compared to the historical averages. Absolutely crazy. In addition to this, at 4.09 million, again, the lowest number of home sales since 1995, this is pretty wild because in 2021, we had 6.12 million home sales, and that was a 15-year high. 2 years later, we went down to a 28-year low. Quite a bit difference compared to just 2 years ago. On top of that, as a note right there, the US population and the number of houses that we have nationwide is much higher right now compared to the 1990s. So at 4.09 million, this is very, very low numbers here, especially compared to 1995 when we had tens of millions less of a population. On top of that, we had far fewer houses nationwide as well. Now, don't take my word for it, because in 2020, that was the last time we had a population count from the US Census Bureau. In 2020, by their estimates, we had about 331 million people in the US. In the year 2000, 281,000 or 281 million. 1990, about 248 million. So when looking at the average here, let's just call it around 260,000 in mid 1990s. If we had 260 million people compared to 330 million, that's a huge increase in population numbers. So to say we have the same number of closed home sales since the mid 1990s is very, very telling. Okay, let's get back to my spreadsheet here, because our forecast for this year is at 4,262,000 closed home sales this year. Besides the previous year, 2023, that'd be the fewest number of closed home sales since 2011. So even though they're calling for sales to rise by 4% year over year, we're still at very, very low levels. Then in 2025, to increase to 4,777,000, and that is still less than the median since 1989. Okay, let's also talk about their forecast for home prices. And Fannie Mae uses what's called their home price index. That's their index regarding home prices on a national level here. So they're calling for the first quarter this year compared to the first quarter of 2023 to increase by 7.2%. But after that, they're calling for a decrease each and every quarter through Q4 of 2025, because by then we'll see prices, or their expectation is for prices to only increase by 0.3% compared to Q4 this year. So overall, this year, they're calling for prices to increase by 3.2%, and then to increase only by 0.3% compared to 2024. And also, their HPI rose by 7.1% last year. Also, by the way, a gain of around 3% is more normal in long-run averages regarding home prices. Let's also have a look at their forecast for rates. The average 30-year fixed is going to be 6.5%, at least their expectations this first quarter, and then decrease each and every quarter thereafter until we hover around 5.7% to end the year of 2025. Overall, they're calling for the rate to be 6.2% this year, and then a decrease only slightly to 5.7%. With that said, I'd love to hear from you guys. What do you guys think about their real estate market predictions through 2025? Leave me a comment below. I appreciate you. Like and subscribe, and we'll see you on the next video.